We also thank our co-partners Khaitan & Co for their support. And let's keep the energy high in the room. Can I request some of the, our delegates sitting at the back to please come towards the front? I promise the next sessions are going to be very exciting. So I would invite you to maybe come and seat in the front. And now, whether you're planning an IPO or scaling while staying profitable, our next session is packed with insights from industry leaders who have navigated these challenges firsthand. I'm excited to introduce an incredible lineup of experts who will guide you through this complex yet rewarding journey. Please welcome Akshant Goyal, CFO Zomato, Aloke Bajpai, CMD and Group CEO ixigo and Charter Member TIE Delhi-NCR, Kunur Bavishi, Senior VP IIFL Securities, Yashish Dahiya, Chairman and CEO PB Fintech and Charter Member TIE Delhi-NCR, and moderated by Shereen Bhan, Managing Editor CNBC TV 18. Shereen has over 20 years of experience in the field of television broadcast, tracking corporate, policy news and events that define the business landscape in India. We are also joined by Aloke Bansal from Policy Bazaar. Over to you, Shereen.
Thank you very much. Good afternoon, ladies and gentlemen. What an absolute pleasure it is to be back here at the India Internet Day, and it's particularly a proud moment for us at CNBC TV 18 to be talking about an issue that we've covered and tracked for over 2 decades now on our show Young Turks, which is India's longest-running show on startups and entrepreneurship. We just turned 22 this year, and everyone here that you see on the panel has been part of that program, and it's a delight to see how many young startups have now emerged as part of the ecosystem and how many are considering the possibility of IPOing. So what we attempt to discuss as part of this conversation here this afternoon is the decision on why to IPO, when to IPO, and post-IPO, how does life really change for startups? Each one of these individuals here now has experience of having IPO'd, and of course Kunur will throw light on what it takes to IPO, but navigating growth and profitability, the balance between that, the judicious balance that is required for the founders, for the execution team. What does it mean in terms of capital allocation? What does it mean in terms of diversification? How do you judge risks? All of those will be issues that we discuss here as part of this conversation. So without further ado, let's get started. Akshant, I'm going to start by talking to you about the decision on why to IPO. And in the case of Zomato, the decision was on account of COVID. I remember Dipi saying very clearly that it was a desperate contingency plan because COVID had impacted your business so badly that you had no choice but to raise money, and you weren't even worried about the kind of subscription that you would get. So take us through that time on the decision of why IPOing and when you finally decided to go about it.
Yeah, thank you, Shereen. Yeah, so for us, I think it started with that. During COVID, around July 21, our business had shrunk meaningfully in the COVID times, and it was still loss-making. And fundraising from private markets was not an option at that time because no one knew how the world and our business will come out of COVID. And hence, I think that is when, over a lunch break, I remember us talking about, okay, should we go public? Maybe it's easier.
Over a lunch break, you decided, should we go public?
Maybe it's easier.
Is that how things happen at Zomato, over lunch break?
That's how this conversation happened, with Deepinder asking me that, look, should we go public? Maybe it's easier to raise money from public market investors. And
because the private market had dried up.
Yes. And, of course, there's been no history of, before us, a company like us, which is loss-making, raising money in public markets. So, my first reaction was like, look, this is even going to be harder than raising money from private markets. But I think nevertheless, since we had no option or weren't seeing much traction on the private side, we said, let's start the work, let's see where we go. And I think luckily for us, by the time we were prepared to go public, the sentiment had changed, business had bounced back. And in fact, before we went public, we raised a lot of capital from private investors, right? So a lot of things changed. So we don't know, had things not changed, we still don't know whether we would have made it. But yeah, I mean, that's how it started. And I'm sure like for different companies, triggers are different, right? I think there is no one good reason to go public. It could also be just like it unlocks energy in the organization. That could be a reason to go public as well. But in our case, sort of, that was where it started from.
Absolutely. It could be more than just a financing event for many. It could be an exit option provider in many instances, and it could just be a natural progression for a company as part of its life history and its life journey to go public. But Aloke, let's talk to you, because what we've seen in the case of Zomato, for instance, been around for 15 years and then the decision to actually IPO. In your case, 17 years. You've been around for 17 years and then the decision to IPO. And in fact, the first attempt at IPOing didn't go as per plan. You pulled back and then decided to go ahead when the market sort of came back to some semblance of normalcy.
Yeah, absolutely. So, Shereen, I think one similarity is like we attempted to raise a private round back in 2018-19, didn't go as per plan. And we said, look, let's make the company profitable. So we worked for the next 12 months to make the company profitable. First quarter of the 2020 calendar year, just before COVID, we turned profitable and COVID arrived. And we took a decision saying, look, this is a time when most OTAs are going to play defense. It's time to play offense. And, you might remember, but we were refunding people left, right, and center, even though money wasn't coming from airlines.
And you didn't lay off people either.
We didn't lay off anyone. We actually hired more people in the team, in our customer support, because people were not picking up calls at airlines and OTAs in those days. And we just said, look, if we actually do this right, and things do work out. In the worst case, all OTAs are dead anyway. But if things work out, maybe the karma we earn at this point, will come back in a big way. And it did. So when things opened up...
You were accumulating good karma, is it?
When things did open up, FY21 for us was actually bigger than FY20. And in the COVID year, we were profitable. And that gave us immense confidence to say that, look, the future is going to be only better because travel hasn't opened up yet. The second wave had still not arrived. And we said, let's just... start working towards that right away. So I think sometime in February, March 21, we had a board meeting. We just acquired, in fact, we made two acquisitions during COVID, Confirm Ticket and Abhibus. And during that board discussion, we said, perhaps we should go public. And, Zomato's filing was one big inspiration for us as well, saying that, look, this is a time when a lot of companies would not think that going public is what you'd be working on, because we were all sitting on Zoom calls and working all day, right? So we did. But we said, it's perhaps the best time, right? And we filed our first filing, back in late 2021. We got probably 6 months delayed because by the time, we got the approval, the market had started correcting, right? And it was not the best time to go. And our numbers were looking better quarter on quarter. So we said, fair enough, let's wait. And for 2 years, we just executed, grew our revenue and profits. We were 6 times of pre-COVID last year. And that's the time when we said, maybe it's time to pull the trigger now.
So karma did work in many ways than one. Aloke, let me come to you now. What gave you the confidence at Policy Bazaar, you and Yashish, to actually decide on going IPO?
So our reasons were very different, Shereen. I mean, we didn't need the money per se. Even on the day of IPO, we had almost 70% of the money that we raised as a private company is still in the bank. But as you rightly mentioned, it's not just about the money raised. It can also be about, sort of signaling to the market that companies come of age. The business model is more established now, so it's become more predictable. It becomes a liquidation event for your investors, for your employees. But I'd just like to add one very different flavor to it, because, as founders, and this is not something which a lot of people can appreciate. As founders, this is the only thing we have. It's a 0-1 for founders, right? For investors, it's usually an option. You can sell tomorrow, you can invest in 5 other things, but founders के लिए तो 0-1 ही होता है यार, कुछ है ही नहीं और, right? So if we do not have confidence in the survivability of this model, then we have wasted 15-20 years of our life. So there is no option for founders but to make the business model stronger and stronger with time, right? And whether it's profitable...
But you can make the business model stronger and stronger, continue to drive profitability and drive profitable growth, and yet not IPO. I mean, that's what Zerodha essentially is doing at this point in time.
See, I don't want to comment on any other business, but the way we'll think, if you look from the conservative point of view, a listed company will usually be more stable, and it will be seen to be more stable, right? One is the model itself, and one is the perception of the model. because you are talking to regulators, you're talking to investors, government bodies, your customers. Everyone believes that, okay, now you're listed, you are scaled up. So it's become more trustable also. Like in an insurance category, you need the trust as well.
Right.
So eventually, yeah, this is more about, in a conservative way, just saying, okay, we have more trust that the company will survive for much longer now once it's listed. So, there are multiple reasons.
Yeah.
But for us, capital raise was actually the last reason.
Last reason, yeah. Capital raise was the last reason. And it's an important point that you bring up about trust, especially in regulated businesses like yours. And I would imagine that that does play a part. Kunur, but let's talk about the many shifts that have happened. One, of course, the breadth and the depth of India's startup ecosystem, it's changed dramatically in the last 20 years, as I pointed out. The private sector and the private market enthusiasm has been waning in the last few years, and we've seen that funding winter, which now seems to be much more sort of structural in nature, at least as of now. And then the ability for the public markets to understand and perhaps appreciate new age business models more or better, especially after the likes of Zomato have gone public. What do you attribute to the kind of confidence that we're now seeing in these stories from a Dalal Street perspective?
See, from a market perspective, new age businesses growth is never the question. Everybody knows, whenever any investor invests into India, essentially it's for significant growth. And when you compare new age businesses versus anything else, which we call traditional companies listed, the growth is way superior. The question was always around profitability.
Yeah.
It was a question which was asked until 2022, 2023, that these companies which are growing at this pace, at what stage they will actually deliver profit. And I think once some of the bigger ones, few of them sitting here, have listed and delivered, demonstrated it, I think that's where the whole market appreciation for the businesses have happened. And typically all these cycles start with the larger companies, which are you are more familiar with, right? Even whether it's Zomato or Policy Bazaar, even before listed, you are familiar with what the company is. So once that has happened, then it sort of trickled down to the smaller businesses also, so that you have a very solid business plan. Now, whether you're on a consumer side or enterprise side, people believe that, okay, these businesses at certain point in times can become profitable.
And will deliver returns.
And they will deliver. So that confidence has come back, and it's not them. Other companies also have
pricing. Pricing has made a
Absolutely.
big difference in terms of how these issues are being priced today.
Yes. So obviously, see, when you are only looking at growth at that point of time, the matrices used to be different. When bottom line starts happening, you like it or not, people start looking at the bottom line numbers, which is EBITDA and all these days, right? That's the change of thought. But I think importantly, markets, if you see in terms of the absolute valuation perspective, it is still very strong. So it's not as if that you change so the valuation comes off. It's just that you are getting a very different multiple which you trade at, which most other businesses don't get in the country. So I think markets' ability to understand that a lot of these businesses have serious value, and these businesses are going to last for much longer than what you would have thought pre-COVID is really the confidence booster which is there. And obviously, you have phenomenal liquidity in the domestic market.
Yeah.
So everybody, whether somebody was invested in an unlisted security or the mutual fund, everybody has got that confidence. So you're going to see more and more of this happening.
So 2024, an even bigger blockbuster year in terms of IPOs?
Next 12 months, more than what you have seen in the last 12 months, for sure.
For sure. Well, let's talk about how life has changed now as far as all of you post an IPO. And Akshant, I'm going to start by talking to you. As Kunur was pointing out, as far as the private markets were concerned, GMV was enough, and now suddenly you have to talk about EBITDA, and that becomes the metric that is going to be most watched and most scrutinized. Now, it took you, how many quarters? I was taking a look at that time to profit since listing, about 8 quarters. What did you do differently? Because we've also gone through this mindset, especially through the private market boom, where easy money was easy to come by, where nobody was talking about profitability. It was growth at any cost. Suddenly, you're now talking about growth and profitability. For that mindset shift to happen, for that change and that transition to take place, what were some of the tough decisions that had to be taken on the back end?
So I think in our case, it wasn't that because we became public, we had to shift focus on profitability. In fact, when we went public, we were a loss-making business with very little visibility on profitability, and that's how we sold our IPO to public market investors. And I think they were pretty okay with the profile of our business, the way it was. Right? So I think in our case, the business matured in those 2-3 years to a point where it became profitable, right? And given that, business like ours are usually new businesses, and people don't know at what point they mature. even we were not sure of how long it will take to get to that point, right? And it happened in 2 years after IPO. But I don't think like.
But was that pressure, for instance, to ensure that you move faster to profitability as opposed to had you not listed?
No, I don't think so. I think public market investors want and appreciate clarity, right, on how they should think about this business in the next 3, 4, 5 years. And as long as you're transparent and you give that direction and clarity, right, they're willing to underwrite the business basis that information, right? So I don't think in our case it was like because we were public, we had to get to profitability. I think we just sort of focused on keep doing the business, and I think it got to a point where it started becoming profitable.
So again, it was a natural progression. You're saying
Yes.
It wasn't anything specific that you decided to do after listing to turn profitable easier, faster.
That's right, and same is true for the other business that we acquired, Blinkit, right?
Blinkit,
it
yeah.
was a loss-making business which we acquired while we were public, right? And we got.
And there was a lot of backlash.
I mean, like, I think
Then-
backlash is more in media. Like, that transaction required a shareholder approval, and we got 98% of our shareholders to vote for it, right? So, I think a lot of this perception around, backlash is also, I think, basis what you read in the press. But I think shareholders were supportive. They were, yes, skeptical of how this business will shape up when the food delivery business itself was still young, right? But if you look at that journey now, that business also matured way in much shorter time than what it took food delivery to get to that point.
Even
Yes.
ahead of your own expectations.
Yes. So I think like we are all in businesses like these, right, where you're trying to disrupt the status quo. And when you're doing that while being public, it's going to be slightly hard to make the business predictable. And I think that doesn't change now. That doesn't change 2 years out. I think that will be the nature of this kind of business. But
you're saying that there is an appreciation and an understanding of the unpredictability of the bets that you make as long as you're transparent
Yes.
in communication, but you also have the track record of execution.
That of course helps any business. I think with time people will, when you underwrite a business, you're also underwriting the management team, and therefore track record over time helps, right? But I think key is communication, right? Because on how clearly are you communicating and making sure that you as a company is leading the narrative on your business rather than people conjecturing on what it could be, given that our
Yeah.
businesses could take many paths.
Well, I'll come back to Blinkit and the growth trajectory that you see for it in a bit. But Aloke, I want to pick up on what we just heard there from Akshant on the fact that they decided to make a very bold bet with Blinkit, which was an over 4,400 crore rupee transaction while they were loss-making and they were public. Now, decision, actually it's not even a decision yet, but a thought that Policy Bazaar has put forward in the possibility of entering the healthcare space. We don't know in what shape or form it's likely to be, but that has seen the stock markets hammer your stock down consecutively for the last 3 trading sessions. Now, as a founder, do you believe that if you're a listed entity, does that weigh in on your ability to take risks and your ability to diversify?
Okay, so I'll just mention 2-3 things, very different perspectives. See, typically businesses can be broadly classified into 2 different types of businesses. One is where you build a factory or a hotel or some asset. You spend 3 years, 5 years investing, you get some loan, and then you start to monetize. All the businesses that you are seeing here, we are digital businesses where you have to invest into what? 2 things only. Marketing and tech, broadly.
Yeah.
And because these are P&L expenses, every year you see the loss. So what we seem to be doing is that we are pushing out our profits into future by investing today. And the more you invest, that time frame may be even longer.
So you're saying
Right.
the lack of profitability is by design
Yeah,
at
so
this point in time? Or when
Profitability is
yeah.
a choice. I mean, you can have it today, you can have it after 5 years. If it helps you become stronger, and if it helps grow faster, it's a call that management team have to take at some point, right? Typically, like you have mentioned about growth and profits, I actually think of growth, scale, and profits.
Right.
Because growth is imperative, but scale gives the model that much more strength. And especially in a business like ours, where you talk to insurance companies, you have to have that scale to get the right sort of product or process innovation from them also, right? So we start to think of very, very long term from that perspective. Now, what typically happens in a public market versus private markets is private investors usually have an 8 to 10 year time frame.
Yeah.
A lot of time, depending on the fund time frames. Public markets usually will not have that long. It can be 3 months. It can be at the best 3-5 years. At the best, right? Second, private investors, you get to interact a lot. So they can go deep into data. They can go deep into strategy discussion with you. Public markets usually get 1 hour per quarter at the best. So again, the understanding of your business has to be shallow by design. So, as founders, as management team, you have to do what is right for the business. And our time frame may be 20 years, which is not the time frame that any public market investor is seeing.
Yeah.
But if it makes sense for the problem that you're trying to solve, you still do the right things. Like he mentioned about Blinkit, just around the IPO time, we started 3 new initiatives, all 3 loss-making. We started expanding into different cities for call center, for physical meetings, setting up the claim team. Everything is, technically a cost. But that is the right thing to do, and that's enabled us to grow faster today. But if we were getting influenced by, okay, this is what investors want to see and this is what we want to showcase, I don't think then you have a very long time frame for the company and for yourself.
Right. So you're saying the markets should not determine the growth strategy and the growth aspirations of a company. You need to make bets that you believe will not just help you survive, but help you thrive in the long run.
See, if that's the case, just think about it. Tata's could have never started Indica and the whole passenger car division. They could have never started even TCS. Right? Yes, you talk to investors, you try to explain your point of view, but you have to decide what is right for you in your time frame.
So are you getting into the hospital business?
See, we very, very firmly believe that's a very important need for middle class India today. The sort of over-treatments which happen in the hospitals, the frauds which can come into this, any person walking into a hospital is revenue for the hospital, but it's a cost for the insurance company. So unless that part is controlled, the consumer trust, and we're talking about middle class India, the consumer trust for that segment will not come. And unless that consumer trust is not there, they will not come to buy. And even if they come to buy, they will not buy. They will just look at the options and go away.
But getting into the asset management?
No, it's not asset management. It's the experience management. Asset can be owned by anyone. It doesn't really matter. But the experience has to be controlled by someone who understands the customer needs and the customer pain points.
Has the investor reaction startled you, surprised you, rattled you? Are you
Not really.
Are you reconsidering the plan?
No, not at all. See, Shereen, if you think about it, we sort of started talking about it about 4-5 months ago.
Yeah.
The share price actually moved from 1300 to 1900 in that time frame. So technically, you can even say that, okay, investors loved it at that time frame. Now it's come down by something, it's okay. You can only do 2 things. You can execute, you can communicate. What is happening in outside world is not in your control. Tomorrow Fed rates, China, something keeps on happening. How do you know?
That is true. You can only control what you can control. But Aloke, again, in terms of the outlook and the approach to capital allocation, to diversification, to the kind of risks that you are willing to take as a listed entity, has your approach changed?
Not much. So I think the way we think about these things is that we have to do what is right for the customer. And if what is right for the customer involves investing in areas where you may have a cycle of many quarters or many years of a payback period, one will not be shy of doing that, because if you look at our entire journey, it's been about that only, right? For almost 8-9 years, nobody understood why we were so focused on trains, right? And then the monetization took off, and suddenly it's like half of our revenue. But it's almost like that bamboo that you plant, and then for many years you're frustrated because there's nothing coming out there, and it's really small, and then one fine day it's growing like 12 centimeters a day. Because it was important for it to develop those roots and in the soil get all the nutrients it needed to actually get to where it was. So I think the only thing we are obsessed about, and we were obsessed about, and we will remain obsessed about, is are we delivering the best customer experience? Full stop. Right now.
How often do you look at the stock ticker?
Sparingly. And, I think what I tell my team is that what's on the ticker is essentially things that you did many quarters ago. Right? So you got to worry about where that ticker is going to be 2 years, 3 years out, not where it is today, right? And the actions that you do today need to be focused on customer experience to define that. So that's how we think about these things.
I want to go back to the point that Aloke was making about the difference in how private markets treat bets and convictions as well as public markets, and just the appetite in terms of the time frame for payoffs. How have you seen this change from a public market perspective, Kunur, as you're looking at more IPOs coming in?
So see, yes, there's definitely a difference, and also within private capital, also it's a function of what is the nature of that fund, right? And that determines where you're taking your capital from. I think from public market perspective, as rightly said, while it's good to have profitability or etc., I think what has happened is, so long as an investor has got the understanding that here's a business which has established itself, market position, here's a business which is defining its particular segment, and then it's a question of whether the natural course is going to take you over 1 year, 2 years to there, people are acceptable. And there are some recent examples also of companies which have gone public. So I think that is the case where it is. Now, unless, if you're a very small company, right, and it's something which is going to take time for you to establish your market position, then it's a different proposition altogether. Again, public market obviously works on limited data, unlike private market.
Yeah.
But I think the important for public market is what is the narrative which is going on and what is the consistency to that. So long as you are there, and even if it is a bad news, people, you go and tell them upfront, people, there can be a knee-jerk reaction to it once in a while, that's okay. But if you see the more long-term investors, they will stay, right? Nobody is going to just walk out of it.
No, and that's very interesting that you point that out, because I remember Mr. Murthy always reminding me this, and he said that his message to his team always was that let the bad news take the elevator, let the good news take the stairs, and that's the way to communicate. And I think that's a crucial point that you make as well. But Akshant, coming back to you now, and let's address the issue that Aloke was talking about, that what you have to obsess and focus about is not what the stock ticker is telling you today, but what it could potentially tell you over the next 2, 5, 10, 15 years, because you're all trying to build companies that last. In terms of now decisions on capital allocation, in terms of growth strategies, let's start with Blinkit and then let's talk about District as well, because Zomato is getting into the whole experiential space. The kind of headroom for growth that you see, and how different do you think Zomato of today is going to look like from the Zomato of the next 5 years?
I think one way to look at this question is like how different Zomato of today is versus Zomato 5 years ago, or even 10 years ago, right? And I think we were having a chat.
It was Foodie Bay before it was Zomato.
And I think therefore I think we really, any conversation with any stakeholder which is about like a 4 or 5 year commitment, we are very wary of that, right? Because the business can change so fast that who we are today could be a very different business like 5 years out. So I think, and from our perspective, I think we are continuously looking for areas where we can solve some problem for the consumer that we have on our platform today. And we believe we are a platform for discretionary spends for consumers. And if we see a problem that can be solved and that can lead to a large addressable market, I think we'll take a shot at it. That's how we think about new businesses.
How do you see potential challenges? And let me address that from the lens of regulatory challenges, because those are the ones that are not in your control. To Aloke's point, that you can only control what you can control, and you have no control on things like regulations changing. Now, for instance, you talked about Blinkit, and that's slated to be the next big thing as far as the Zomato growth story is concerned. You suddenly have the government saying that, look, quick commerce is a problem. We need to look at how quick commerce is operating. You need to work with the Kirana stores. Do we need to bring in regulations specifically or not? Complaints have gone into various ministries at this point in time from various associations. When something like that happens, how do you deal with it? How do you cope with it? How much of a risk or a threat is it to your business?
I think it's part of building a large business. I think same thing happened with the food delivery business maybe 3 years ago around the time of our IPO. Suddenly the entire country, the political system, the regulatory system discovers a new business, right? And I think it's only fair that they want to appreciate it more. And we've been, last 2-3 years that has happened for the food delivery business, where, now there is finally appreciation of how that business works and helps the country and the small restaurants and the delivery partners across various departments of the government. And I think we're totally open to engaging with the government and regulators on going through a similar journey with the quick commerce business. I think it's a duty to do that and to make sure we take any feedback that comes out of that process and
Is the
improve
discussion and
business.
dialogue ongoing?
It always is. I think, I mean, since we've become public, I think we've become better at it. And we're trying to sort of engage more and more with everyone.
Aloke, let's address the regulatory challenge because, you are in a regulated business, unlike Akshant, and you do have changes being brought in by the IRDAI, including things, potential disruptors for the insurance sector like the Bima Sugam and so on and so forth. How do you look at the possibility of regulatory changes? How do you brace yourself for regulatory headwinds?
See, typically, anything which is good for the industry or good for the consumer, it ends up being good for us as well, right? So we are not very, very worried on those points. You continue to engage with all the stakeholders continuously. You know exactly what's going to happen, hopefully, next few months or few years. On top of that, I think India is a very, very big opportunity. You are targeting a small segment of customers at any given point of time. Like in our case, we have been very, very vocal that we are solving for the social security needs for middle class India. There's a huge amount of people which have assets. There are a huge number of people who cannot afford to buy this peace of mind. We cannot solve for them, right? And we are focused on, again, protection insurance needs. There are other sort of insurance which is out there. There are corporate insurance. So, everyone will find their own place. Typically, if it's good for the industry and good for the consumer, it's good for us. So we don't have any issue with that.
Alok, have you had to deal with any of that?
Thankfully, not much regulation in our space. But what I'll say is that, look, sometimes a certain level of regulation which sort of sets a level playing field for everyone is obviously good. And if you look at capital markets, again, there is a strong role that the regulator plays, and all of us have dealt with it in the process of going public. And I think the larger good is where, you feel that there is some need. In terms of the need in our industry, what I feel is that we need to make it simpler to set up new businesses that that can come up in the field of aviation, and we are seeing 1 or 2 new airlines come up.
Yeah.
Because this country badly needs more airlines, right? I mean, if you look at the demand-supply gap, and the planes aren't coming fast enough, right? We need a lot more bus operators. So there have been a few who have entered and raised more money, or some global guys who have come in, but we need a lot more of that. And
Alok is trying to address that by getting into the healthcare space. Are you looking to get into the airline business?
We are not going to do package tours to hospitals, no. Just kidding. But I think travel may right now, the biggest problem is that there is not enough supply in everything. On trains, 1 out of 3 tickets sold is a waitlisted ticket, right? On flights, we all know, we all fly. There's not a single seat we ever see empty. Not even in premium economy and business these days. And on buses, probably there's still some capacity addition happening. But I think the government's role there should be to enable more supply creation, and whatever it takes to bring down the cost of bringing more supply in. That can be a huge relief for consumers at this point.
Kunur, for people who, they've already IPO'd and we've heard from them on their own experiences. But for those who are looking at the possibility of IPOing, haven't filed their papers yet, what should they be mindful of? What should they look at? What should they consider? What should they weigh in on?
So I think the first point is the reason which we started this discussion is the why, right? An IPO is not because suddenly you're seeing some crazy markets and a lot of deals happening. That's never the starting point to do. I think there is...
Could be a temptation for many, though.
It is a temptation, but you need to take stock of the business, whether you are ready to go to public market, you like it or not, you need to talk to investors, give sort of communications in terms of what you're going to do, quarterly disclosures, etc. And, private companies, depending on the stage you are not always used to doing that. So I think those things are important to answer. Yes, sometimes it has to be to do with your stakeholders who need an exit, then for that you do that. So I think the first thing you need to do is the why. We always think that in a good company, there will always be a market. You can have a valuation up or down, but there's always a market for a good company. So yes, I think once you know the why, I think then it's a question of preparing yourself, getting the house in order, because in public market, it's not just the founder, multiple things need below finance, secretary will have to get used to the process. And then I think there is this overhang thing that once you go to public, there's a lot of stuff to do. It's not actually.
Yeah.
It's pretty streamlined in terms of what you're supposed to do. Importantly, I think what a lot of people are looking to see is what is your journey, what is your profitability, or the path to profitability is a question which everybody asks. And so long as you have a very clear answer which is explainable, right, whether it's now or 1 year, 2 years later, I think then there is definitely a reason for you to go. It is a capital form which is available quickly after that. If your business needs more capital later on, follow-on offerings are much quicker than an IPO process.
Right.
So it helps you a lot, right? And the private capital market right now is not in the way it used to be 4 years ago. So the public market is a lot more sort of buoyant, and it is going to be like that for a while.
Absolutely, much more buoyant than the private market at this point in time. If you have questions for our panel, please do send them to us. I can see Vijay Shekhar Sharma has a question here for the panel. I'm coming to you in just a second. We're going to try and get a mic across to you, Vijay. We would want that to be on a mic. But Akshant, let me come to you now and talk about growth while we get Vijay a mic. Throw some numbers for us, Akshant. How much of the growth that you anticipate in the future is likely to be driven by inorganic growth? Blinkit, what you saw with Paytm, the recent deal that you've done to get into the whole experiences space, and Vijay is here as well. Will M&A drive future growth, and what kind of capital allocation are you likely to make on account of that?
So it's very hard to say that unless you know what you want to do in future. I mean, at this point, we don't know if there is, or don't know of any other business that we want to build beyond the 4 businesses that we have. And if there's an idea, then I think there's always this build versus buy, even in this whole...
Is it easier to buy versus build today?
It depends. Like, I mean, food delivery we built without buying anything, right? In case of District, we bought Paytm's business because we were building it for a while and realized how hard it is to scale the business given the market dynamics. So M&A made sense. In case of Blinkit, M&A made sense because you need a team that is experienced in retail market in India, and we had no experience in-house. So I think it's very context driven. I don't think we are, I mean, we have to be objective about taking these calls depending on the context.
Aloke?
I think it depends on, what your core competence is and what are you buying. I mean, in our case, we made a couple of acquisitions where, it was largely about either strengthening an existing vertical or like adding a new vertical to our business. And I think the preference usually is that if we can build it right, because there's a lot of variables that you can't control that you bring in when you do an acquisition, right?
Right.
And then
The integration challenges.
The integration, the culture, the technology integration, etc. But I think companies like us tend to typically want to do everything organically as a preference, and we'll only acquire when we find something really exciting out there, which we think can add, value to what we do.
Okay, Vijay?
I go back to Alok's last comment, which was about India needs supply. So why we have not seen airlines flourish and they continuously continue to drop, what I'm trying to say here. And what happens there? That so much of demand and they aren't able to even survive for themselves.
Vijay, I think you know the answer, but you're still asking me this. But, that's a very different topic.
My intention exactly
That was really your question.
My intention exactly as Shereen is saying is there a ixigo plane that we are going to see?
Is there a Paytm plane that we're likely to see?
Absolutely never.
Maybe a Zomato plane. Is there a Zomato plane likely, Akshant?
We can't answer these questions. That's how you navigate public markets. So sometimes you have to say no.
Yeah, we can't make forward-looking statements here.
Can't. Well, unless they're 5 years out, not for the next quarter. But Alok, do you see M&A as being a growth driver for the future?
Not for us. Our DNA is more built, as Alok also said. We have rarely ever invested into anything, and it may take time, but it gives so much more strength to the whole business if you build it organically within the company. So, and it gives chance to the internal team to also grow up and take on larger responsibilities. So, we are very big fans of building in-house.
Okay, fans of building in-house. I'm not asking for a guidance for the next quarter or even the quarter beyond that, but Akshant, I'll start by asking you, the headroom for growth across the 4 businesses that you currently operate in, and we would like to understand. I mean, everyone now believes, after having no conviction in the quick commerce story, everyone's suddenly a believer in the quick commerce story and can't seem to get enough of it. I mean, what is the headroom? People are calling Blinkit the Amazon moment for India's internet. How would you describe it, and what do you believe could be the potential headroom for growth?
See, Shereen, honestly, no one knows, including us, right? I mean, most of these businesses are built on latent demand. These are not obvious businesses or problem areas that you're trying to address where you can come up with a top-down size of the business, right? It's not like quick commerce created something new. There was a commerce going on in the country, and it's a new channel which made it more convenient. E-commerce did that to the country 15 years ago, and therefore it grew. Food delivery did that, made it easier to consume restaurant food. So at least we don't obsess about trying to even spend time on how big this could be, because we'll discover as we go along and we'll sort of course correct.
You do have to make choices in terms of how you intend to build this out further, just given the current demand that you're seeing and the expectation of demand moving higher from here on. So what does that mean in terms of dark stores? What does it mean in terms of future investments into Blinkit, etc.?
Yeah, so I think our job is to respond to what we are seeing on the ground, and rather than actually worry about 5-10 years out. And today on the quick commerce business, we are seeing, I mean, the way we're trying to therefore answer that question for ourselves is to go to smaller cities and open a store and see whether there's a product market fit for this business in those markets or not, right? So we started with the top 4-5 cities. Then we said, okay, let's launch the top 15th city in the country and see if it works there. It did well. And we're like, well, let's open the 40th largest city in this country and see if it works there. So we're on that journey right now to see how deep this market is. And, one is like whether this works in a city or not. And second question is, okay, within a city, how large this market is, right? Because if you, let's say, launch quick commerce in Dehradun, does it work only in 1 location or 5 locations or 10 locations, right? So I think all of this, at least in quick commerce, for us is something which we're still discovering. In food delivery, I think it's played out now. We are now, say, in 750 cities. We know it works everywhere. In those cities, all of those cities are profitable today, are growing well. So I think more predictable in terms of how growth will shape up in that business from here. But quick commerce, I think, is still very early in terms of how large, in terms of us having a point of view on how large this opportunity can be.
Aloke, in terms of opportunities and future growth, what are you betting on today as an entrepreneur?
See, I think if you look at our country, only 4% of people fly, right? And they take multiple trips a year. That becomes the size of the market. Less than 20% of buses are booked online. Less than 33% of hotel rooms are booked online. So we're still very early, right? Despite almost all the OTAs listed now, we're still very early. And that's the excitement of continuing to build. And most of this growth is going to come from tier 2, 3, 4 towns. Out of the next 100 airports, 78 are coming in tier 3 towns, right? Not even tier 2 towns. The next 100 million flyers are people who are already sitting in trains today, and a lot of them would already be using us. So we see that as an imminent vector for growth, and that's how we have been delivering faster growth than the market on the flight side of our business. I think hotels is a new opportunity we've just gotten into, like about 9-10 months back, and we think there's still a lot broken in the space that needs to be fixed. So we'll work on that, and then that's when we'll talk more about it.
Okay. You already gave us an indication of what is broken that you believe you might have an answer in terms of a fix. How soon before we hear more about that, a final decision on yes or no on healthcare from you?
So the experience management part, it's given. We are very committed to doing it. See, we talk about social security for middle class. There are only 4 risks for the middle class that they should plan about. Risk of early death, risk of late death, risk of hospital disability sort of stuff, and risk of child cost planning. I mean, you have to plan for these 4 things. In any developing country or developed country, this is about 30% of GDP. And you're trying to solve for that. So we'll do whatever it takes. And we have a very, very, very long time frame, 20 years, 30 years, whatever it takes.
20 years, 30 years. Yes, we've got more questions. We're going to try and get a microphone. If you have questions, do raise your hands very quickly so we can get mics across to you. Yes, go ahead.
Hello, Aloke. I have a query that the travel is booming, the health sector is booming, but I think there is something missing that is happening in urban areas. The traffic is also increasing and the patients are not being able to reach to the hospitals. 1-1.5 घंटे के अंदर जब तक वो पहुंचता है और कार्डियक अरेस्ट हो जाता है बीच में तो पेशेंट चला ही जाता है. तो क्या वो एरिया खाली नहीं है जिसके अंदर हम लोग की एयर एम्बुलेंस ट्रेवल में दे सकें और आलोक जी को कंट्रीब्यूट कर सकें हेल्थ सेक्टर के अंदर?
I mean, it's a real problem, though. And many entrepreneurs, by the way, many startups have tried to address that issue as well. Alok, is that something that you may want to consider at all?
I was studying the aviation sector and I saw that this is missing somewhere.
Yeah. No, it's a good point that you make, yes.
See, it depends on who is paying. These are called PPO models, payer provider models. If insurance company is paying and in healthcare is the service provider, you can create lots and lots of different stuff. Whether it is healthcare at home, healthcare in transit, small setups, multiple things are possible. But the problem is today the focus is how do I maximize my revenue from this customer? And that is not going to solve for it. You have to focus on the quality of life and longevity of life, not just the revenue from that customer.
Can't we put some 1 rupee, 2 rupees in the...
We'll have this conversation offline. Unfortunately, that's
Yeah.
not a business that any of them are in. Yes, go ahead. Yeah, you've got the mic. Go ahead.
Hi. Sir, my question is for Mr. Akshant Goyal here. Often the media believes that Zomato is riding an irrational curve. In the sense, if it was a lion in the private market, it has become a bigger lion in the public market because it has both investors' confidence and customer confidence that Zomato can't go wrong. But we would love to have some insights into how Zomato has maintained investor relation in the private segment and how they've evolved those relations in the public segment with larger shareholders.
Good point. Go ahead.
Yeah, I think it's an important point. I think the biggest change once you go public is how you communicate. And I think the earlier you acknowledge that and embrace that and actually figure out ways of coping with that, right? I think the better it is. Because when you're public market, it's like almost addressing a crowd like that as your investor base versus in a boardroom that you can do as a private company, right? So I think you need to, as I mentioned earlier, that be very clear, articulate, and give the clarity that investors want. I think investors don't usually, at least in my experience, I've seen that investors usually agree on what is right for the long term of the business, but they may not be the right investor for that journey, right? And they may tell you that, look, you're doing this, makes sense, but I can't be a party to this story because my risk appetite doesn't align with this path, right? So I think on aggregate, public market investors are smart, and I think sometimes they're made out to be like demons. I don't think they are, but if you communicate well, they let you do what you want to do and build the business the way you want to do.
Yeah. Yes, go ahead.
Hi, my name is Rachit and I'm the founder of a faith tech startup called Meri Bhakti. I've got a question for whoever would like to answer this, right? With the type of companies that you guys run and all, you're always in public scrutiny, right? People are talking shit about either you or your business or your work ethics, work practices and all. How do you deal with the pressure? Does it not get to you? Because it's 24/7, chit chat on Twitter, news channels. How does that play alongside the human mental psyche?
Entrepreneurship is also a pretty lonely job. Akshant, you want to start?
No, I think if the business pressures are more than those pressures, then you end up ignoring the other pressures, right? It's like you have to prioritize pressures in life, right? So if you have more pressures than just dealing with this, then you're fine.
Alok?
Yeah, keep the signal to noise ratio high, essentially.
Alok?
No, it does get tough once in a while. I won't say that we are superhuman and we can absorb it. Yes, it becomes tough. Having a senior management team where you can share these things or a co-founder usually helps. But it's not easy, to be honest. I just sent a message yesterday to the core team internally that even after 16 years, building a business is very emotional. And the message basically said that one life should solve for hard problems. Either build or die trying. But that's the only way. But it does get to you once in a while, yes.
No, I imagine that they're making it sound as if it's easy, but it's not. And you pointed out, it is emotional. You have your own skin in the game in many ways, in more ways than one. I'm going to end. I think our time's up, but let me get final comments from each one of you. And Akshant, I'll start by asking you, for all of the people, startups who are watching, what's the one piece of advice that you would like to leave them with, not just from an IPO perspective, but more from a perspective of building to last?
I think focus on the right things, and I think listen to everyone, but do what you think is right. I think eventually there will always be different points of view, and if you are the one building the business, then you have to take the call and you have to own that decision, right? So with the freedom to take decisions also comes the responsibility and ownership. So it works both ways, right? So I think
You can't shy away when things don't go your way. Aloke.
I think you have to always remain focused on customer experience. Like I said earlier, I can talk about it for an hour. And don't be shy to reinvent yourself time to time. I think Akshant mentioned Zomato doesn't look like what it looked like 5 years ago. I mean, same I can say for ixigo. And for most successful companies out there, you will notice that pattern that, you got to keep changing with what's next, because the puck is going to move somewhere else and you've got to be ready to anticipate that.
Kunur?
I think whenever, and this is what we've seen from the outside, businesses which are successful are once you start with a purpose and you're focusing on that, don't sort of build the business with thinking what will your next valuation round look like. Yeah. Focus on what you're supposed to do and valuation will follow. I think that's the way to think about it.
Aloke?
So there is no right or wrong answer in any of the things. Eventually, your ethos define the DNA of the organization, and be true to those ethos. Whatever happened, whether you're listed, not listed, growing, not growing, but be true to those ethos, whatever it is.
Whatever it is, be true to who you are and what you stand for. Ladies and gentlemen, a big round of applause for our panel here this afternoon. They have navigated the public markets with both profitability and delivering on the premise of growth, and we wish all of you the very best of luck in your future endeavors. Appreciate you joining us. Thank you very much for joining us here, ladies and gentlemen.
Thank you for that great session. We wish to present the panelists with a token of our appreciation from TAI. We would also like to thank our co-partners, Avas Media Network, IIFL Securities, and Kalari Capital for their support.